All right, what a week for the Nifty 50. It's one of those weeks that kind of leaves you scratching your head, right? We saw this massive rally on Friday, but the week actually closed in the red. So what's the real story? Let's dive in and try to figure out this bull-bear tug-of-war. So here's where we landed, 26,047. Now on the surface, that looks like a pretty solid number, but trust me, the journey to get there for the week ending December 12th, 2025, well, it was anything but smooth. And that's where the real story is. And this, right here, is the biggest puzzle of the week. I mean, look at this. Friday, we get this awesome surge, up over 0.5%, a really strong way to end the week. But then you zoom out, you look at the whole week, and oops, we're actually down 0.36%. So what gives, right? This disconnect between that daily strength and the overall weekly weakness is exactly what we're going to unpack. Okay, so let's start by digging into the actual numbers, because it really was a tale of two different market tapes, two different sentiments battling it out all week. And wow, what a roller coaster this week was. Just look at the range. We're talking about a massive 400-point swing between the high and the low. That just goes to show you how intense the volatility really was. The Sensex? Pretty much the same story, closing down just a little bit. And the broader market? Well, the mid-caps definitely felt the heat, dropping even more. So, you might be asking, where did all this push and pull actually come from? Well, on one side, you had sectors like metals just absolutely leading the charge, up a huge 3.4%, probably fueled by hopes of better global demand. IT and autos also pitched in with some much-needed support. But then on the other side of the rope, you had the defensive sectors like FMCG, and they were a real drag on the market, falling almost 2%. Now, of course, these numbers don't just happen in a vacuum, right? Let's take a look at the bigger picture, the key market movers that were really shaping this whole battle. So what was actually driving this tug-of-war? Okay, on the positive side, you had this growing hope for a US Fed rate cut. And that's a big deal because it could bring a lot more foreign money, FIIs, into our markets. Plus, financials were performing pretty strongly, which always helps. But pulling in the complete opposite direction, we had a weaker rupee, we had FIIs actually selling earlier in the week, and a whole lot of caution around those US-India trade talks. It was just a constant back and forth between these forces. All right, so we've covered the what and the why. Now let's get into what the charts are telling us, because this is where the story gets really interesting for the week ahead. Okay, so this is the crucial part. Even though we ended the week with a loss, the chart formed what we call a long bull candle. Now, think of it like a sprinter with a really strong finishing kick. It means that even though things looked shaky at the start of the week, the buyers came in with some serious force and took complete control by Friday's close. And for traders, that's usually a pretty powerful bullish signal. So with that signal in mind, here are the key battleground levels you've got to watch. Number one, the bulls have to defend that critical support zone between 25,850 and 25,900. That's their line in the sand. If, and it's a big if they can hold that line, then the path really opens up to step two, a potential run towards that upside target of 26,300 to 26,400.
Okay, so let's put all the pieces together. Let's make a clear game plan. How do we use all this info to figure out what might happen next week?
It really boils down to two main scenarios. The bull case is pretty straightforward. If the Nifty can stay above that crucial 25,900 support level, then the momentum from Friday's bullish candle could absolutely carry it up towards 26,400. Now, the bear case is the flip side of that coin. If that support at 25,850 breaks, well, the sellers could take control, and we might see a slide down towards the 25,600 level.
So how do you trade this? Well, based on everything we've seen, looking to buy on dips in those outperforming sectors, like metals and IT, could be a pretty solid strategy. But, and this is a big but, you have got to keep a really close eye on any news about those US trade talks and watch out for any sharp moves in global bond yields. And of course, as always, protect your capital. Seriously, always think about using things like trailing stop losses to lock in your profits and limit your downside.
So after all is said and done, we're left with the one big question. What's your move going to be? Are the bulls going to build on that Friday momentum, or are the bears finally going to win this tug-of-war? The market's given us the clue.